The whole industry makes most of its profits from some malicious acts. I somehow thought something that they don't do until when I became now the insider. One lady lost $3 million.
Okay.
And she was told, add more. If I'm still seeing losses, I'm still going to learn and make sure that I have the right information to become a successful trader. It was a point of there's no return.
Yes.
So risk to reward more than win rate.
If you're in a trade right now, take a pause. If you haven't analyzed the markets, don't move. This might be just what you need. This is the Mind of a Trader podcast where we cut through the noise, focus on execution, and break down the mindset behind every move. This is where discipline meets strategy. I am your host presenter Ali, and this is where real traders sharpen their edge. Let's get into it.
The Mind of a Trader podcast, where we outthink the market.
And of course, today we have a very special guest who's here to break down his strategy, share his journey and insights that he's been able to learn for the years that he's actually been in the game. I'm so happy to actually have him on board because we've had a conversation for a while in regards to this podcast. And I want to thank you guys so much for the support that you have always shown to this Mind of a Trader podcast. But before I speak too much, please let our guest introduce himself. Karibu.
Thank you.
Uh-huh.
Yes, my name is Shen Mwangangi,
Yes.
former market analyst.
Yes.
Now I have my own company, Anakazo, where we trade and teach traders how to trade using market profile and order flow.
Wow.
Yeah.
That's amazing. Welcome to Mind of a Trader podcast. And I want to ask the first question that I normally ask everyone who gets to the podcast. When was the first time you got introduced to forex or you heard the word forex trading? And what did you go through during that time when you before you learned about forex trading?
It was actually during my internship, attachment in my third year in university, studied at St. Paul's. So during that time, I went to a certain company where they used to code. I did BBIT. Then I was like, no, this is not something that I want to stick in the office from 8 to 5. And after a while, I started searching online. What is something that I can do online and how can I make money? So I found forex. Went to Nairobi School of Forex, called them, asked them, is this something that I can do that I can make money and be like I don't have to go to school anymore? And the obvious answer was yes.
Wow.
So I studied there for 3 months. They taught me, of course, support and resistance, candle patterns, the rectangles. And I was like, okay, let me try it. Did it for like a few months. Yes, I made some profits, but looking at the losses, they were more than the profits. So I kept on studying, looking at what can I do more. Searched until I found Agia Futures. It's a company in the UK where they teach about market profile and order flow. So I studied and made sure that I understand what they teach. It took me a while, more than a year, until more than 2 years of studying market profile and order flow, because it's a little bit complicated, but once you get it, ni hivyo. And also I saw another one coming up teaching about market profile and order flow, which is World Class Edge, where if you search online Fabio Valentini, you will see is the top 1% scalper in the world.
Wow.
So also learned some few concepts from him, and also that's how I gathered from Agia Futures and World Class Edge, brought it together, and now I was able to come up with a strategy that I'm using right now. Yeah.
Interesting. And your journey seems seamless, and can you attribute it to the fact that you went straight into the learning process other than going directly to start trading? Because most people that we've been seeing on the podcast, they started, with the trading, then they realize this thing cannot work without the knowledge. I need to go back and, learn something. Would you attribute, the fact that your journey was, in as much as it had some, challenges here and there, it looks like it was a little bit easy, quote unquote, because you went straight into the learning process other than going straight into the charts?
I won't say it was easy. Because I remember the first time when I was trading, during using the chart patterns and support and resistance, Actually, I made a lot of loss, and the first person who funded my account was my mom. Funded me with 100,000 with 100,000 Kenya shillings.
Okay.
It drew straight from Britain. Quickly, I believe in you. Take. Went and tried to trade it. Within seconds, you know that mistake. You try to put 0.5 to like a 5.
Yeah.
I just saw the account went, and I was like, "What will I tell my mom now?"
Wow.
Yeah.
Then what happens?
Of course, she aliniambia mbona only drop university. Why are you doing this? Yeah. So, like, even she had a meeting with her friends, brought her friends in the house. Aliniambia, you need to go back to university.
Yes.
If I had I had the recording, so I was
Yes.
like, I have to release these recordings once I'm successful.
Yes.
But the other phone went, but I think I can still find them. So I was called in a committee, our mama, nikaambiwa, you have to go back to school. I refused. Told them, I'm going to learn. If I'm still seeing losses, I'm still going to learn and make sure that I have the right information to become a successful trader. And that's how I continued learning and learning and learning, because it was a point of there's no return.
Yes.
So I have to focus ahead. I'm not going back. It's like you're burning the bridges behind. You're focusing on your move ahead. So that's it. I chose more of knowledge and information and practicing. And I was like, I'm not going back.
Wow, interesting. How long did it take you for you to actually now start seeing consistent profits?
1 year.
1 year.
No, like how long?
Yes,
Okay,
yes.
this is my first year I'm seeing profits. So it has been more than 4 years.
More than 4 years to
Yes.
actually be consistently profitable. And I want you guys to actually notice that most of the people I bring on the Mind of a Trader podcast, no one tells you that they got it after 6 months, after 2 months, after a month. Consistent profits, not just profits, but consistent profits. And I want to base that conversation for a while so that people can understand what we are actually talking about. Consistent profits does not just mean that you're making profits today, then tomorrow. It just means that over a long period of time, you can actually be able to say that I am making more profits than losses. It also does not mean that you're not making losses.
It's true.
It is very interesting. So tell us about the trade that you caught, that you would say that I never thought that I would ever catch such a trade.
All right. So I think it was last year last year part one. Last year time like this. Before I joined, I was trading an investor's account. This person, may I mention his name? If it's okay.
No worries.
Called Mr. Fred. If he's seeing this, well and good, you can comment. So I was trading his account, and he funded with $6,000. I made like 4 trades consistent wins. And I was like, is this thing possible? Making back-to-back wins. And I made over, I think I took his account from 6,000 all the way to 8,000. And I was like, wow, this is something that I can actually do if I'm consistent with it.
Yes.
So
That's amazing.
That was
That's
it.
amazing. People do not sometimes celebrate such wins because of social media. Of course, people are always looking for like the crazy flipping and everything. But I'm interested to know, have you ever flipped your own account?
I've ever flipped my own account. Yes, I have. And of course, there are those small flips from 100 to 200.
Yes.
But my biggest flip has been from 4,000 to 8,000.
Crazy. In how long?
In just 1 week. Yeah. That is with aggressive trading. But I am a conservative trader, as we had that talk earlier.
Yes.
So I was like, I was hearing your stories, like there's these types of people.
Yes.
But I was like, oh, you mentioned the last one as conservative.
Yes.
I'm that one.
Yes.
Yeah.
That's amazing. It gives you like a lot of peace of mind.
Yeah.
Because at the end of the day, when we are trading, we're looking for freedom, and I think peace of mind is a freedom in some way. You know, set your stop loss, set your take profit, and you do not have really to care about it, because however way it goes, you have very good peace of mind. There are very many things that happen in the industry. We have people, being sold, fake bots, people being scammed, and it's a thing that has given the industry a bad name. I don't know if you've ever gone through that phase in your trading career.
I've gone through that phase, and one of the phases that I went through was when I was in, of which I think because of some agreement, I won't mention it, but you know it, I mentioned it to you. But I think it was that phase when I realized that the whole industry makes most of its profits from some malicious acts.
Yes.
So I think that was the phase that I went through. It was actually this year. So yeah.
Okay. Interesting. So is it something you had seen or known about the industry for the past 4 years, or is for the past 3 years, or is something that you're like, oh, I didn't know that this existed?
I somehow thought it is something that they don't do, but I heard the rumors. But it was until when I became now the insider, when I worked inside the company, and I was like, wow, actually it happens. And it happens a lot. Till the last time when I was shocked was a lady lost $3 million.
Okay.
And she was told, add more.
That is very interesting. And maybe I can just explain to viewers how this normally happens. We have different types of brokers. Of course, we have the A-book and the B-book. B-book make money from you losing the money. Other than the commission, spreads, and all those things, they also make money from you losing. So you have to be very cautious when it comes to the broker that you're trading with. You could be the best trader in the world. You could be the biggest sniper in the world. You have just sniper entries, but if you have the wrong broker, you can actually fall a victim into losing lots and lots of money. That's why, of course, we normally do advocate for a broker. The link is actually in the description. Now we are going straight into getting to understand your strategy. Before we get here, please, can you explain to us the way you would explain to a PP1 child how your strategy is? Because, of course, we have a community of beginners and we want them to get the best of the best in the simplest way possible.
All right. So this is something that I love doing, explaining how I trade, because it's something that I've worked on for, again, more than 4 years. So I realized the market is like an auction. You've heard of auction market theory?
Yes.
So the market is like an auction. If I take, let's say, iPhone, they have released this phone right now. Apple, they've released an iPhone right now.
Yes.
The iPhone, the market price is $1,000. But let's say something comes out and they realize maybe the battery is messed up. The prices will go down, Cindy. So prices have shifted from 1,000 to, let's say, 800.
Yes.
Because of some information that came in.
Yes.
No, that's fundamentals. Because of some information that came in. Now, there's someone who's buying, there's someone who's selling. Now, we all know the market price is $1,000. At $1,000, that's the place where people are willing to buy and sell. That's a place where value is seen. Auction market theory takes price, time, and volume. And where we spend most time is where value is.
Yes.
So, assuming now you've spent most time at $1,000, that's where value is. If information comes in and takes prices to $800, we have to see who are the people willing to participate to take the prices down. Now, we see sellers stepping in. Now we use order flow to see the numbers using footprints.
Yes.
Are sellers stepping in? If sellers are not stepping in, they're not willing to take the value down. But if we see aggressive sellers stepping in, it means the market is ready to shift from this point of value, $1,000,
to 800.
to $800.
Interesting.
Yeah.
Yes.
So auction market theory, I think there's a video where I think we'll see it together, where a banana was auctioned for more than $1 million? It's way more. Yeah.
Okay.
So you can see the auctioneer starting. Now the auctioneer is like the market maker.
Yes.
The auctioneer starts and says, I'm going to bid this banana at, let's say, $500.
Yes.
Then they find so many buyers. Then he takes the prices up because there's still people willing to participate.
Yes.
Then he takes the prices up to $600. Buyers reduce, but still there are people willing to participate. Let's say we had 20 buyers. Now they have moved to 30 buyers.
Yes.
We still have buyers. The goal of the auctioneer is to find the last buyer
Of course.
at the highest price. So he will take prices up and up and up
And
until
buyers will keep on decreasing.
decreasing
Yes.
until we reach a point where, let's say, he skipped from, let's say, $700 all the way to 1,000,
Yes.
and he finds there's no one willing to buy there.
It's just
Therefore, right now he's forced to take the prices down until he finds now where buyers are willing to participate.
wow.
So the market is
That
just
is
like an auction.
literally the structure of your strategy.
Yes.
Interesting. Are you guys ready? I think we should go. So you're about to show us how you actually break the strategy down.
Yeah.
So please go ahead.
All right. So to begin with, we have auction market theory.
Yes.
Then we have market profile. Then lastly, we have order flow.
Yes. Nice.
So, auction market theory, this is not a strategy. It just explains how the market moves. So, number one, market moves. The three principles of auction market theory is price, time, and volume. Price is an advertising mechanism. I'll explain. It's an advert. Time, where we spend most time, shows value. And volume, now this one shows us whether the trade is valid or not. Because you see, if you want to shift from, okay, valid or not. If you want to shift from, let's say gold is at 3,000. You want to move to 4,000.
Yes.
There has to be people participating. And it's either buyers or sellers.
Or sellers.
But you see, the reason also why volume is important, we all know you have over 7 trillion traded daily in the markets.
Markets, yeah.
It is daily. But it's not retail traders who move this money. It's the big institutions.
Yes.
So for them to shift from this point to this point, they have to, like if it's buyers,
You can just use on top kidogo
on top, okay.
so that we can see.
So if it's buyers, you have to see the volume of buyers increasing. So volume is important.
Yes.
So if we spend, most,
Just use on top there.
if we spend most time at a specific price, it means this is our area of value.
Okay.
If now we shift from this point to another point, it's called an initiative. If we shift from this point of value to another point, it means we have participants stepping in, and these are the large participants. Because they're the people who decide they want to shift from one price to another. Not retail traders, but the large institutions. But also large institutions, they only move based on information.
Okay.
Yeah. So that's auction market theory.
Okay.
And let me give an example. You have an iPhone. I think I explained it earlier on.
Yes.
You have an iPhone. iPhone comes out at
$1,000.
$1,000. Let's say something came out that shows us that the value of the iPhone is increasing. Now they shift the prices to $2,000.
Yes.
For us to be able to shift from this point to this point, again, it was because of information that came in.
That gave the product the value.
And because of buyers willing to, based on the market now, but based on this one, is because now value has shifted.
Yes.
Now the perception of this item, the value has shifted to this price.
Yes.
So we have people willing now to people who are willing to participate at this
2,000.
price.
Yes.
But assume there's no information that came in.
Yes.
There's no information that came in. But now we want to, we see buyers want to take prices up here. Let's say we have iPhone. They want to now take the prices to 2,000, but they do not have anything that is valid. At this price at 2,000, you won't see any form of participants. Therefore, these prices will be rejected, and they'll be forced to take the prices down where we have people willing to participate. So at this point, this is a point where now this is called a responsive trade. We had initiative. Now responsive is when we come back to value. Sellers are willing to take prices back to value. And let's say, assuming now they try to take prices outside of value. Let's say umesikia iPhone store anauza simu at 800.
Yes.
Hakuna information imetokea. Tu wameamua tu kuuza at a discount. They're selling at $800. This point, not people are willing to sell at this price, but buyers are willing to step in quickly.
Yes.
So buyers will step in and take prices back to
1,000.
Because they will buy is stock iishe, then aseme aturudishe price to 1,000. It's like a sell-off, then sell-off imeisha,
Yes.
back to the normal price.
Yes. Yes.
So market profile now will help us see how value is shifting.
Okay.
Because you see, large institutions, they do not trade at specific price points.
Yes.
They trade, let's say, they have a range of where they're going to interact. So, because if they decide to trade at a specific price point, it will shift prices vibaya sana juu.
Yes.
They only do that when news zimetokea kama NFP. That's the point they take advantage of the market.
Yes.
So they trade at, let's say, wanna buy, then wanaacha kubuy. So they buy and buy and buy. Then when they decide now it's time to stop buying, it's like now the volume has reduced. It's like a car moving up a hill. So it's moving up a hill, then the fuel, it's exhausted.
Yes.
Therefore, you move down.
Yes.
So when you're using a typical volume graph, you will see volume reducing.
Yes.
So if you want to know that this is a valid pullback, it's volume reducing. But if you see volume increasing at a pullback, it means there are participants who are selling. And there's a likelihood you might move down.
Yes.
So volume increasing when there's a pullback shows us that sellers are willing now to participate. Now it's no longer a pullback, but it's a valid reversal.
Wow.
So at this pullback now, you want to see volume reducing. Then when they come back now the large institutions, they step in. They're willing now to buy again.
And push the markets up.
Wow.
This is a very interesting aspect. Could we be having a point where the prices are going down, but the volumes are high?
Prices are going down?
Yes.
But volumes are high?
Yes.
Now, when prices are going down and volume is high, that's a sign of a reversal taking place.
Okay.
Yeah.
Now, looking at the opposite of it, from now having the market is going down and it's about to go up. The market was going up, it's about to go down, right? So how does this look?
So the market is going down, then goes up.
Yes.
All right. So you have to see a shift in participation.
Yes.
So let's say the market was in a downtrend, right? Then it switches, then moves to an uptrend.
Yeah.
So at this point now, the volume was up as we're moving down, because you have to see sellers willing to take the prices down.
Yes.
At this point now, you have to see volume reducing.
Yes.
Then
we know
down participants shift, buyers step in, volume increasing.
Interesting. So that's literally the market profile.
No. Okay. This is just explanation of a little bit of order flow, but a typical volume graph.
Okay. So we already, this was the market profile you're explaining.
Yes.
So, and this is a little bit of this.
A little bit of order flow.
Okay, let's continue.
All right. So stepping in now to how market profile looks like. So a market profile will look like, a typical market profile will look like a bell curve, where 68% of the market profile, that's where we have our value. 68% shows that this is the point where we spent most time. Where we spent less time, this is our non-value area. So this is our value area high, our value area low, and you have something known as the point of control.
Okay.
Yeah. So at a typical day where we have the market is balanced, okay, we have a market can be balanced or imbalanced.
Imbalance.
Yeah. In a balanced environment, this is where more of responsive trades take place.
Okay.
Responsive simply is when you try to come outside value, sellers step in, they take prices back. If you try to come below value, buyers step in, they take prices
Up.
back up.
Okay.
In an imbalanced environment, this is an environment now where now buyers have seen information stepped in, they're willing now to take like gold right now. Not right now, but the previous days. Right now, gold is selling.
Yes.
The previous days, gold was buying and buying and buying.
Yes.
And we could see also in Indian stores, people flooding in India stores, buying gold, buying
Yes.
gold.
Yeah.
So you can see the value of gold is shifting and buyers are willing to buy more.
Buy more.
So information came in that the value of gold is rising. So at this point, this is the point now we'll be using order flow, as we'll discuss later on, where we'll be looking at this point to see any form of interaction where whether buyers are willing to step in or they're reducing. And if you see they're if we see they're reducing, now we have to show another form of participation of sellers increasing. So if you see sellers increasing now, buyers reducing, sellers increasing is a sign of responsive. But buyers increasing, sellers reducing, a sign of initiative, stepping outside of value.
Wow. So what is happening here, for me to understand this properly, is buyers step in, right? They push the market up to here. But once it gets here, it faces rejection because we have sellers now stepping in and bringing the market here. Okay?
Yeah.
Then buyers step in again. It goes up. Probably we go back to the AMT where we have some information reaching people that, you know, probably the value of gold will go up or something valuable is happening to a specific, you know, currency. So now more buyers will be interested in it and they'll push it upwards.
Yeah.
I'm correct?
Yeah, true. That's true.
Nice one. We can continue.
All right.
Okay. I'm enjoying this session. It's very informative and I hope you are also doing this. So follow closely. If you miss a point, just make sure you just scroll back and come again so that you can be on the same page with us.
Am I speaking first?
You're good.
All right.
Yes.
So the next thing is order flow.
Yes.
Order flow, we use something known as a footprint chart. We also use cumulative volume delta, and then we also use volume bars and volume at price. We use these three.
Okay.
So a footprint simply looks like this. Let me rub this side.
Okay.
A footprint simply looks like this. So what you see when you're trading just using candlestick is a one dimension.
Yes.
You don't actually see the volumes taking place.
Yes.
But when you zoom in using footprints, you'll be able to see bars at each and every single price.
Yes.
So let's say we have this is side of bid where you have sellers, side of ask where you have buyers.
Bias.
So assuming now we are at this level,
Okay.
number one, at each and every candlestick you'll see a delta and you'll see volume.
Okay.
Delta simply means the total calculation of bid and ask. So delta is bid minus ask, and
Okay.
it gives the total. So let's say we had, at this price we had 10, 0, okay, assuming we're buying, we had 0, 10, 0, 1, 5, 8, 0, let's say 15.
Okay.
So you can see buyers are aggressive at this point,
Yes.
and you can see sellers are being stopped out
Yes.
by this form of zeros. Sellers are not given the opportunity to enter and sell because buyers are aggressive. They're taking the prices up and up quickly.
Yes.
So using your order flow chart, your footprint chart, you can set, you don't have to look at every single number at the price. You only have to see whether you're seeing imbalances marked out,
Yes.
which you can see using your tool. You'll set it out and you'll be able to see yellow marks.
Okay.
On ask, you'll see red marks. So the moment you see imbalances where sellers are not given the opportunity to sell but buyers are becoming aggressive at this price level, shows us there's an initiative taking place. And this can be a chance to buy.
Okay.
But you also have to see volume increasing. Let's say at this level, volume was at, let's say 2K. But at this point, you're seeing volume shooting up to 15K. So you can see there's some participation stepping in.
Yes.
And let's say delta, if you calculate this, assuming a rough estimation, it's 15. If it's negative, it will show negative. But if it's positive, it will just show the numbers. So assuming it's 15. So you're seeing delta is positive, volume increasing. So buyers are stepping in, and they're not only stepping in, but they're also increasing in volume. An initiative is taking place.
Wow.
Likelihood, you want to? Once you come and test this place back, you can buy or enter an aggressive trade after this candle closes.
Okay. Now, the retest is a very common theory that, of course, we see it in all charts. But how can you explain it with this? What exactly is happening at the retest?
All right. So yes, we have stepped in. We've stepped out aggressively using this.
Yes.
Then at the pullback, we don't want to see volume of sellers increasing.
Yes.
We don't want to see delta of a negative delta, and also the volume of sellers increasing using the volume bars. We want to see volume reducing, showing that there's no participation taking place at this pullback. This is just like
It's like a test.
no, it's like releasing your foot off the
Ground, like starting a sprint.
no, it's like when you're driving, then you've released. I want to say in Swahili, but
Yeah.
may say it
Yeah.
umeachilia mafuta. Yeah.
Umekanyaga alafu kachilia
Ukachilia
kidogo
mafuta.
ndio. Okay, I
Yeah.
get it.
So at this point, you don't want to see volume. You want to see volume reducing. Then the moment we come here, you want to see now buyers willing now to participate.
Okay, interesting. It's like a move made by the institutions to tell you now we are about to go.
Yeah.
Wow, I love this. I hope you guys are on the same page. As I said, if you don't understand, just scroll back and then come again so that we can be on the same page. Let's continue. I know this is among the, somehow I would use the word deeper, strategies that we've had. We've had the very simplest strategies. And of course, people have said that we want intermediate classes. We want, advanced classes. So we are getting there. Let's go.
All right. So I won't touch on CVD and volume multipliers. I'll leave it for
next class.
So the next thing that we'll look at, I think we can look at, okay, let us look at a bit of cumulative volume delta.
Okay.
So cumulative volume delta simply
Just
means...
use all these spaces, yes.
Thank you.
So that the cameras can get it. Yes.
All right.
Feel free to use different shades.
All right.
In case you want to change anything.
So cumulative volume delta is still part of order flow. So you want to see, if you see delta, okay, cumulative volume delta simply means it's a total number of delta from when we open the market to where we are at the moment.
Okay.
So it will take the price, the delta numbers from each single candlestick as we continue. But it will plot it in a way that it's like candlesticks.
Okay.
So if we see, for example, let's say, assuming this is price, and this is CVD, cumulative volume delta. So price, we're seeing it making highs. But cumulative volume delta, we're seeing it making
Lows.
Okay. So it means at this price point, now when you're looking at price, remember we have passive entries and aggressive entries. Passive entries are people who have placed limit orders.
Yes.
So assuming now we have limit orders at this price, we have now this market that is balanced. And we want to step out aggressively. So we have, how I teach, you have absorptions. You have an absorption and exhaustion. Absorption simply is you have sell limit orders at that price point. So the buyers are being absorbed as you're trying to move up. So CVD will show us by lower lows.
Okay.
So it will help you now. It will tell you that this information, that there's a possibility we have passive entries which are strong here, passive sellers who are strong here. Therefore, do not take this trade. Be ready to take a responsive trade to trade back in.
Yes.
Because once passive limit entries are triggered, it becomes now an order. And now sellers step in aggressively from a limit order to an aggressive order. Because limit orders, once executed, becomes no longer passive, but market execution.
Market executions.
Yeah. So,
wow. I think today I'm having a very interesting masterclass right here.
So when you see signs of absorption by number one, the cumulative volume delta printing lower lows, but the price is printing higher highs, there's a chance now you want to be still and wait for another information of a sign of
Reversal.
Reversal is now sellers entering aggressively.
Aggressive sellers.
With delta increasing, delta going up, and volume also going up.
But now the charts will start showing, will start going down.
Yeah.
For the price part, yeah.
Yeah.
Okay, interesting. So you're using, you are looking at three things on your trading view. You're looking at the delta. You're looking at the volume, and you're looking at the CV. Is this CVD?
Yeah, cumulative volume delta.
So those things, the three things that we've mentioned, how do you get to look at them? Do you use indicators, or you can look at them and just tell?
I used TradingView. They have a premium side where you get to pay.
Yes.
And you get access to these tools.
Yes.
So you get access to the market profile, you get access to the footprint, you get access to the CVD once you just pay.
Yes.
So if you have one screen, it will be hard for you. I use multiple screens. So one screen is showing me the market profile, another screen showing me the footprint together with the CVD,
Yes, yes.
and another screen showing me the prices. And then I have my phone for execution.
Interesting.
Yeah.
And do you have, with all this information, are you looking at a specific time frame, or are you looking at different time frames, or are you looking at smaller time frames, or it depends with the type of a trader you are?
Right. So if I'm a swing trader, I will plot my market profile on a weekly chart. If I am a day trader, I'll plot my market profile on a daily chart. So a market profile is based on, we'll see on, once you look at the chart, is based on blocks that are plotted after every 30 minutes. So after the end of the day, the shape of the market profile will be clearly seen. So assuming now the previous day we had a balanced market, I won't touch on imbalances. Assuming the previous day we had a balanced market. Now a balanced market will look like a typical bell curve, like this one. Now this is the previous day. This is the previous day. We had a balanced market. Now, in a balanced market, two things can take place. Either we continue with responsives, or we can continue with initiative. Sellers stepping out of this form of balance.
Yes.
And again, I explained how we can see this, how we can see responsive, how you can see initiative. Another thing that helps us is where did we close from the previous day.
Okay.
So assuming now we closed around here, we closed outside value. This is known as, we have day types, market profile day types. This is known as a neutral extreme. So we closed outside value. What you want to see now is us not stepping inside of value. You want to see us coming here, then moving back down when you open the next day.
Wow. We're done with this. We get to the charts.
Yes, we're done.
So you're about to see the strategy that you've actually seen being explained on the whiteboard now in the charts. So we are diving right into the trenches. So Shen, let's go. How do we go about it?
All right. So first of all, we have to open our market profile chart. And I will come here. This is a paid trading view. I'll come here where you see time, price, opportunity. Click it.
Okay.
So I'll have to expand it. All right. Now you can see different shapes of market profile from different days. So this is a candlestick, but now in a form of a market profile.
Yes.
So
this would be a bar. Just move it a little bit.
all right.
So it opened here and closed around here, right?
So you can see the close.
Yeah. So this is a sell. Is a red candle. And this one
We opened here.
Opened here, closed
Here.
here. So this is a buy candle. Interesting.
Yeah. All right. So I want us to look at today's trade. Yesterday, gold sold aggressively, right? Now, this is known as a trend day. A trend day because you can see, first of all, some form of distribution, then single prints. Single prints is just single one line. Then distribution, then single prints, a form of distribution, then single prints. So at this point, where you have the last single print printed, that's where I marked where I'm looking for my entries.
Yes.
And you can see our value area is from here down to here on top.
Yes.
So mainly I was looking for sales because number one, you can see we are moving down.
Yes.
I was looking to sell at this single print where the last we took. Okay, single print is like an initiative where we had the last seller who was aggressive. Then we had some form of distribution. Distribution is where now buyers and sellers start to interact.
Yes.
So I marked it. This is the point now I was looking to buy. To sell.
Yeah.
Then after marking it, now I move on to my candles. I shift on to to my entry time frame, which is the 5 minutes. These candles, 5 minutes. Right.
Okay.
So that's my 5 minutes chart. I'll also add something known as a cumulative volume delta. All right. So I want you to see this. Look at this. So at exactly London Open, that's around 2 a.m.
Yes.
We spend some time at this single print. Then to show us that there's some form of sellers willing to step in. Still on the top of the single print, we saw this is known as a delta punch, where we had a sharp form of delta moving down, showing us that aggressive sellers are willing to step in.
Yes.
So the moment we saw that, that can be number one. You can enter. But wait, we have to look at our footprint. Is volume increasing and is delta increasing?
Yes.
Now, this is why I like to use multiple screens, so I don't have to shift each and every single time. So, footprints. Now, I have to zoom in. Remember I talked about imbalances, right?
Yes.
And you can see, you don't have to look at the numbers. You'll see these marks. Remember?
Yes.
So these red marks shows us that sellers were stepping in aggressively.
Yes.
So there's a form of imbalance taking place. All right. The other thing I'm going to look at the bottom of this candle is volume increasing from the previous candle. So you can see here we have a delta of negative 345. So we had sellers increasing a lot.
Yes.
Because if you compare with the previous candle, we'll only have a negative 5.
Yes.
So and volume of 1.49k. Then this one, aggressively negative 345.
But the volume is higher.
And the volume also is higher.
Yes.
Showing that it's like, again, pressing kanyaga mafuta.
Yes.
So negative 345, delta, sellers willing to participate, imbalances, volume increasing, and also the delta punch from the CVD. And also single print to show us this is the point where we're looking for sellers to step in. Boom, entry confirmation confirmed.
Yes.
You can enter aggressively there or wait again for us to come back up, then you enter.
Wow.
And also you can use the...
That is very interesting.
Yeah. The volume. And this is just a tip of the iceberg. I haven't touched everything. So there's so much more that... There's so much more into this. There are different day types. You have from normal day, normal variation, neutral extreme, trend day, and double distribution. So each and every type of day type has a specific way of how to enter the market. So remember I explained when now we pull back, you have to see volume decreasing. And you can see volume, what happened to volume? Volume was decreasing.
Yes.
Yeah. So that's how we end.
This is very interesting. And you can use this to scalp as well.
Yeah.
You can use this to swing trade as well.
Yes.
All time frames.
All time frames.
What's the win rate for this?
The win rate. I can say like currently at 70%. 70% win rate, and because of number one, human discretion, where your human emotions can limit it, and also number two, when you're trading, sometimes you can have some form of exhaustion happening. You think it's you can have some form of absorption happening. You fail to see it, and you enter a buy. Kumbe you have passive sellers there. Then you want to take a buy. Kumbe auko mona. So also, form of human factors limit it from it reaching. Of course, there's nothing like 100%.
Yes.
And also, you have something like spoofing. Spoofing.
Yes. Yeah.
You know spoofing.
Yeah.
Where orders are placed, then once you come there, they remove it. They remove it immediately.
Yes.
So spoofing also prevents us from reaching that form of complete 100%. So again, there's nothing like 100% win rate, but as long as you're able to make informed decision based on how value is shifting and also looking at how orders are being placed, you're able now to have that edge that will make you become profitable by the end of, let's say, your month or your quarter.
Wow, interesting. So do you teach this strategy?
Yes, I do. I have a company known as Anakazo. When I left HFM, okay, before joining HFM, I was teaching this. Joined HFM, was told, don't do this, do this. So I had to put it on hold. Then now, since I'm out of HFM, that's when now I've stepped in aggressively to make sure people know how to trade using market profile and order flow. You have to milk these brokers.
Wow,
Yeah.
interesting. And how can people reach you if they want to be part of this class to get to understand and learn this strategy?
So I think you can reach me using my number, or you can visit anakazots.com. We have a website currently under development, but still you can reach me. You can reach me on Instagram at Shen Phronesis. It's a little bit complete, Phronesis. And also through TikTok, still Shen Phronesis.
Yes.
Yeah.
I'll actually pin all the numbers and all the digital platforms right in the comment section and also in the description. If you are interested in reaching out to Shen, please do. I believe this is a very interesting perspective that I had never had of the markets, and I'm also going to personally, try and understand it. Maybe before we finalize on this, I want to understand a question I was asking yesterday to a friend of mine who's also a trader. Win rate versus risk to reward. Which side do you pick? Would you rather have a lower win rate but a higher risk to reward, or a higher win rate and a low risk to reward?
Okay, I think the best way to explain this is using the flip coin theory. So, assuming I'm flipping a coin and I have only I'm aiming for tails. So I have only 4 tails and I've lost 6 times. But on those 4 tails, let's say now my risk to reward was 1:3. That's okay. Let's go to 1:2 minimum. 1:2. So I have a risk to reward of 1:2. I'll still be much profitable by the end of my trading week, as long as I have as long as for each and every single trade, I am multiplying it either by 2 or I have 3. As long as I have a good risk to reward, my win rate doesn't matter. So I can say win rate more than risk to reward more than win rate.
Because at the end of the day, if you can't pick both.
Yeah.
Okay, interesting. Thank you so much for coming and also enlightening people about this. And of course, this is the first person that we've had talk about this strategy. What's the name again?
Market profile, order flow, and auction market theory.
Market profile, order flow,
and auction market theory.
Very interesting, because as I said, I'm going to look at it. Make sure you reach out to him. If you need classes, make sure you reach out to him as well. If you need any type of mentorship, I really appreciate you for your time. Thank you so much for coming. It's been a long time coming. We started having this conversation probably 2-3 months ago.
Around there.
Yeah, around there. But finally, we've done it. So, last sentiments?
I know this is it's a load of information.
For a very short period of time, yes.
For a very short period of time. And I know many people want to learn this, and you can still reach out to me, or they can still reach out to you.
Yes, I can direct them to you, yeah.
And yeah, let us learn and let us trade.
For anyone who looks at it and feels like it's very hard, what would you tell them?
It's better to learn and gain more information than being stuck at the point where you are, because I believe if you're at a point where you're losing trades consistently, the thing that you require is not a big account. The thing that you require is more knowledge.
Yes.
Yeah. So don't put in your mind or in your head that this thing is hard. Just learn, practice, Because anything that is worthwhile will be hard at the beginning, but as you continue, it becomes easier with practice.
Wow.
Yeah.
Thank you so much for coming. This has been the Mind of a Trader podcast. I really appreciate you all for watching this video until the end. Make sure you subscribe if you haven't yet, because I'm seeing that over 50% of you are new people and they haven't actually subscribed to the channel. So thank you so much. I've been your host, presenter Ali. And of course, I'll see you guys in the next episode.
The Mind of a Trader podcast, where we outthink the market.